Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have James Ross on the line. He's the CEO of HedgeChatter. He spent the last 15 years disrupting legacy technologies and developing cutting-edge technologies for the markets. James, how you doing today?
Excellent. How are you doing?
Good, good. Volatility supreme yesterday. It looks like it's spilling over into today's markets. But get things started. Tell us about HedgeChatter and how it got started and the services you provide.
Well, HedgeChatter is kind of the brainchild of a couple of people playing in the markets and realizing we didn't have an advantage. And so it didn't end up working out so well. So because we all had big data backgrounds and technology backgrounds, we said, you know what if we started pulling all the social information that's online and started correlating that and finding out who's saying buy and sell and then how often they're right or wrong, and then kind of build a trust rating system on that and automatically correlate that information. And so today with HedgeChatter, what we do is we process about 3.6 million financial chat messages every day in real time covering U.S. equities. And we're able to generate buy and sell alerts based on the people who have been predominantly either getting it right consistently or even getting it wrong consistently. We just simply flip what their recommendation is. So we provide a dashboard where people can see this.
All right, so now you consider social media stock sentiment to be a third indicator of the market. Talk about the other two and how you've determined that this is the third indicator.
Well, I mean, you look at fundamentals and technicals. I mean, they've been around for quite some time. I mean, they're the stable pillars of Wall Street. However, information moves a lot faster. So if you think 20 years ago, if you looked at fundamentals, that was really good information. However, today, if let's say Tesla has one battery fire in their car, people suddenly panic and think, well, we've got one battery fire, and suddenly a $100 million corporation is going to go under. That just doesn't happen. However, you're able to monitor that panic and that reaction, and that's what really gives you that third indicator.
All right, so not all stocks are talked about as much on social media and whatnot. Which stocks typically have the most social influence on them? Are they your high flyers, your high beta stocks? Which ones typically move the most off social media sentiment?
Primarily the ones, obviously, your Apples, your Tesla, any consumer heavy focused product or service company, that's the one people talk about. And predominantly it's because those companies are engaging with their customers and getting them to generate continual conversations about them and about their stock.
All right, now a lot of times social media, I mean, and we think about this all the time, that, there's pump and dumps out there. I mean, the chat rooms were used back in the early 2000s. How do you detect, the validity of the information you're getting, and how do you detect stock manipulation?
That's a great question. So that's really one of our core differentiators between us and others in the market, which that is definitely growing. But we have a manipulation index. So what we're doing is we're tracking not only the usernames that are putting out information, but the actual message themselves that is being put out. So then what we do is we look at, okay, is this username putting out the same message across multiple usernames, across multiple social channels? Are they running this repeatedly throughout the day? Are we seeing very similar message, if not the same message, used for Tesla as it may be used for Apple?
Okay.
And so what we found, it's remarkable. In fact, biotech seem to be hit the most.
Okay, and any other sectors that get hit with the most? I mean, I could see the biotech sector, where there's rumors about trials and stuff. Is there any other sectors that are a little bit more subject to manipulation besides the biotechs?
Well, really not sector specific, but more at a small to mid cap. So if it's a growing company and obviously, they maybe have some small struggles that they're dealing with and the CEO is trying to manage, a lot of people take advantage of that opportunity and then will basically thrust negative news or create new negative news and then push that out. Just kind of, for instance, like when someone created a fake Bloomberg account and said, Bloomberg may be acquiring Twitter. And although that was false, it did elevate Twitter stock for a very short period of time.
very short period of time. So in your work through the social media and the other work related work you do on the site, do you feel that you can kind of detect some of these pullbacks in the markets a little bit before they actually occur?
Definitely so. So we look at two different factors. So one is what's the sentiment, what's the mass consensus on the equity itself? And then number two, what's the actual consensus on the market itself? So we monitor the spot S&P 500 and we run sentiment analysis and predictive analytics on that to understand what's about to happen. And so over the past almost 2.5 going on 3 years now, with our downside risk indicators on the market, out of the 34 indicators we've had, or the downside risk alerts we've had, we've only had 2 that were false. So 32 are correct. So it's a 93% accuracy rate. And they generate, once we have a downside risk indicator, we found that within 24 hours to 3 weeks is when we get the market pullback, and the average is about 11 days.
All right, and I'd have your information here. When did you have one recently?
Actually, we did. So September 10th, we had a downside risk alert on the market. And then, of course, Monday and Tuesday of this week, China's markets pulled back 6%. We actually, because we did not receive another alert, we believed that the Fed interest rate was going to remain unchanged. What's interesting is after the announce of it being unchanged, we then had another alert. So, and then that was last night at just before 1 a.m. Eastern time. And then, of course, the market seemed to be responding to that in a negative fashion today.
Okay. I also have a sample here from HedgeChatter, a S&P, a spider chart here. Kind of explain what we're looking at here and what the implications are for the market moving forward.
Yeah, so basically what we found with social is we can see out about 3 months, and that's as far as we can go. And part of the reason is most people, don't remember what they had for breakfast last week. So with the influx of information, people are living more on information now than just, regular sound decisions. So here what we're looking at is basically we're looking at the negative indicators. Now, we also receive positive indicators, buy signals, and we don't typically trade. We would never trade on the spider itself. We simply use this to show us the market. So we can see the tweets rolling on the left, the news on the right. In the middle, we're able to hover over the horizon, which is basically the price for the spider. And we're able to see how the sentiment changes. In other words, is it strong buy, hold, sell, strong sell? And the red indicators there, those are the actual downside risk indicators. So when those trigger, we know that, again, within the 24-hour period to 3-week window, we're going to see a pullback in the market itself.
Okay, and so we're in that process now. And how long? What's your time frame on for it to play out?
I would say just because of the negativity and just even listening just to the chatter that's going on now and watching it, over the next couple of days, I think we're going to go down a little bit further. And, of course, then it's going to be dependent on the rest of earnings coming out and if we see another red alert. So sometimes we've had multiple downside risk indicators that start collecting up, and then there's a significant pullback. And so, but we think probably within the next 3 or 4 days, we're going to see more of a downside.
All right, and so you look at this information and you see that there may be some stock manipulation going on. Can your HedgeChatter help customers profit from that?
Definitely so. So, again, I've got some case studies on several biotechs that are available on HedgeChatter.com, and you can actually go in and see as the manipulation starts to increase, the stock price starts to increase. As the manipulation index starts to fall on that particular stock, the price falls as well. So we have people that are going in and looking at these patterns and then basically trading either long or short. So in other words, we've seen specific stocks that you can tell are 100% directly held up by manipulation. Now, we don't know who's creating the manipulation. We just know it's being created and it's affecting that particular stock.
All right, we are on the line here with James Ross, CEO of HedgeChatter. Now, tell us why your product is different from some of these other social media analytic products. I know that Joe Getz has one, and there's some other ones out there. What makes yours stand out from the others?
I think one of the core concepts is our CTO has a background in military intelligence, Department of Defense, and we took a lot of that framework and applied it to this. And the reality is, there's a lot of people in the space, and a lot of them just simply provide data and scoring and engines that provide a score. So they'll give you the raw data, and then from the raw data, you now have to calculate, figure out, at a quant level, should you have bought, should you have sold. And so we've actually taken that one step further. We have artificial intelligence built into our algorithms, so it's constantly calculating. So again, we're not just simply looking at sentiment, because sentiment is simply one spoke in an entire wheel of a solution. We're looking at the sentiment. We're looking at the reputation of the authors. We're looking at the influence the authors of the messages actually have. We're looking, again, how often they're right, how often they're wrong, and we're looking at the manipulation component. So today, we're the only company on the market that has the ability to help people understand why a particular stock price is moving up or down outside of traditional messages.
And do you tell us about the product? Is it free? Is it paid for? Is there a trial? Tell us about it.
So we actually have three different levels. So we have an advanced product, which is $29.95. It's a dashboard. You can log in, drop your stocks in the watch list, and in the portfolio. Take a look at those. You have access to all 7,600 tickers for the U.S. that we monitor. We have a institutional platform, which basically gets a little more deep into how the alerts are structured and the access to those alerts, and that's $4.95 per month. And then we have an API that we actually license this out to quant groups, hedge funds, and they're simply pulling that data in. So depending on, do they want to incorporate our signals into the platform, or are they simply wanting to look at just the data and then make trades off it, which we have many, many firms doing now. We price that accordingly.
Are you guys trading any fund or any live money, with your signals? Besides your own, is there a specific fund or something you've designated to track the progress?
We've actually we've talked about doing that. So we've traded it ourselves continually, and for the past probably 2 years, and have done remarkably well. And of course, we have the input from our clients that are extremely pleased with the results we've been able to provide them. And we've actually talked about potentially doing an ETF that would have those stocks in our social buy signal arena, and then make that available to everyone else.
All right, we've been on the line with James Ross, his CEO of HedgeChatter, developing some new technology to interpret social media, which is he's designated as a third indicator of the market. And boy, when you see some of these reactions off these headlines, news, and earnings and everything, you really want to look at the social media aspects of it. James, thanks a lot for coming on. Good information. We'll talk to you again soon.
Thank you so much.